Hi, I'm Paul Chan, co-founder of DLBS. Glad you could join us. Welcome to our first video. Let's begin. Welcome everyone. This is going to be the first of many videos that we have prepared for you. Please be patient. Each one is designed not to be too long where we will lose your focus, but yet it has to be long enough to provide some real valuable content. So you're going to notice each of our videos are about 20 minutes long. Please be patient. You cannot learn options in one video alone. But over time, I think you will find that each layer of information we provide builds on the prior video. So please watch them in sequence and tell your friends about them. This is our philanthropy project designed to share our knowledge about options and the power of options with everybody around the world. So let's get started. We're very proud to be the world's first options trading education portal in Mandarin and English, and we've done this all for free. Often I get asked, what exactly does DLBS stand for? And DLBS actually is the Mandarin pronunciation of our name. The three characters in the bottom right corner is pronounced Da Lan Biao in Mandarin, which translates to big blue mark in Mandarin. So S is for sharing, because at DLBS we believe knowledge should be shared and not sold. So today's agenda, we will give a very high-level overview of what options are, who can trade options, where do you trade these options, when do you trade options. We're going to give you 10 reasons why you should trade options and clarify how exactly do you go about trading options. So let's define, what are we talking about? Options is one of many forms of a derivative. In this case, it's a security or a stock. So the price of an option contract is intrinsically linked to the price of something else, and in this case is a particular stock, the same ones that you buy every day. And because it's a derivative market, so first you have the stock market, and in Canada our largest one is the TSX. It's the one that is owned by the TMX group, and they also own one called the Montreal Exchange, the TMX. So all the option contracts on the right hand side are derived from stocks and shares on the left hand side. One requires the other. Likewise, in the United States, everybody's familiar with New York and NASDAQ. And on the right hand side, you will see a number of exchanges that are specific to options, the largest being the Chicago Board of Exchange. And that's where all the option contracts are cleared. And you'll be noticing that you can only find option contracts for some of the larger companies because there needs to be sufficient volume of buyers and sellers coming together to create another market called the derivative market. So you will not find options chain or any option contracts for smaller companies, especially penny stocks. So let's define. The option contract is basically a piece of paper or contract that gives somebody the right, but not the obligation to buy or sell something. The difference is, rather than being dictated to what the share of the price is on a given day and your decision is only buy or don't buy, the option contract allows the buyers and sellers to each determine the strike price that they want and the expiration they want. So you have a lot more power in your hands, and we'll clarify all of these myths for you later on. The good news is, learning options, you do not need to memorize anything. Unlike the English language where you had to learn A to Z alphabet in 26 letters, and then these combine in a number of different unlimited combinations to come up with tens of thousands of words, which you have to memorize. In options, there is nothing to memorize other than a call and a put. So the call is the right to buy. The right to sell is a put option. That's it. That's all you need to memorize, and after a while it will become second nature. So once you can memorize and understand these two things, also remember, because it is a contract, there's a buyer and a seller. So option contracts can be bought. So you could be the buyer of a contract, and you can also be the seller of a contract. Just like a put option, you can be the buyer of the put option, and you can be the seller of the put option. So there are now, from these two things, derive 4 possibilities of action items on your part. In fact, we can take 1, 2, 3, or 4 of these action items and combine them into up to 44 trading strategies. The good news is you do not need to know all 44. Most people will use less than 4 and just consistently use those strategies to capture movements of the shares up and down and make their profits accordingly. Who out there are exactly trading options? Because you look around you, not a lot of people you know are in this particular industry. Well, that's not quite true. It's just that these are things done online without a storefront, so you really don't know. The most famous is Warren Buffett. And in fact, you look at his personal net worth is larger than many, many corporations. And his company, Berkshire Hathaway, where he has clients, assets under management, is one of the biggest in the world. And if we follow Warren Buffett's famous investing strategies, and he has 2 famous rules for all kinds of investments. Number 1 is you never lose money. And number 2 is don't forget rule number 1. So we will talk about strategies as how to use options, but also use it in a very safe and controlled manner to always protect your capital. And that's the key. Making money is great. Making less money is okay. Just avoid loss after loss after loss. And unfortunately, many people do not follow that rule. Remember, options trading is a skill you learn. It's not a talent you're born with. So you do not have to worry about you not being a candidate. In fact, many people look at these charts and really have no clue, nor confidence as to what exactly they tell. And we will show you how to interpret these and what tools can help you along the way. Because many people looking at sheet music and will get the same feeling as well. But yet this is simple enough for a 4 or 5-year-old to learn. So if a 4 or 5-year-old can learn sheet music, then we can teach any adult to read charts and make option trading. Here are the requirements. Who exactly can trade options? It's really not for everybody. And these are the simple requirements. There's 3 of them. Number 1, you have to be interested to learn. Number 2, you need time to learn. Number 3, you need to have patience to practice. I promise you, you do not need a math degree or business degree to learn options trading. In fact, have you noticed this is just like learning to play a musical instrument? You have to be interested. You have to do it for right reasons, for your own reasons, not because your parents were forcing you to play a piano. You have to understand it takes time to learn, like riding a bicycle. You can't do it by watching. And you have to practice and make mistakes along the way and learn from your mistakes. So we will show you how to make these mistakes without using real money. So who exactly are there that can trade? And this is one particular claim I hear a lot of times, and it bothers me to a great degree, but is probably true. There are no real statistics that keeps track because these are all personal information. But have you noticed though, there are a number of exponentially growing option contracts out there by volume. So where are all these investors coming from? And likewise, I could make the same claim. Most people try musical instruments and quit. And that's probably true for the very same reasons, because they were not interested enough to learn. They did not take the time to learn, or they didn't have the patience to practice to learn. So no matter what you choose, options, no options, whatever investment you choose, make sure you can sleep at night. And we believe even if you don't trade options, it is good to know, because knowledge is power. So where do you exactly trade all these options? Well, the stock markets derive all these option markets, and you are buying these from your same investment brokers that you currently use for stocks. Our strategies are going to be using a lot of examples from North America, because these options have been around since 1973. Many of the emerging markets are only starting in options these days, but our strategies that we show you can be used globally, provided there is enough volume on a particular share to have buyers and sellers. So the number one reason, and we're going to show you 10 reasons why trade options, but the number one, my favorite, will be magnifying returns on investments. And each of these reasons that we show you will have a subsequent section in this video to clarify for you further. But we will also show you how to rent out your assets, how to use options to buy insurance or sell insurance, how options can be a scalable business if you wanted to grow. It's seasonal flexible. You can trade anywhere with internet access. There is no rent, no staff or overheads needed. You have worldwide diversification. Last but not least, you have socially friendly business model here. So we will use an example of BlackBerry shares for comparison between stocks and options. In this particular chart, you see it starts at 12.78 cents per share, rising to 13.73 through various ups and downs. This works out to a 95 cents gain per share for the shareholder if they bought the shares outright, which is a 7% return on their investment. Alternately, I could buy a call option to capture this gain. And using just one of numerous examples, I could say I could have bought a 1-year at-the-money call option, which was about $1.85 per contract, which is less than 15% of the typical capital needed. And at-the-money call options typically will have a higher than 50% delta. In this case, we will use 50 cents on the dollar as an example for simple mathematics. So for every $1 of share price increase in the movement, the call option in this case would rise only by 50 cents. And if I do that, 95 cents captures 50% of that is 47 cents. When I add that to my $1.85 of investment in the call option, I end up at $2.32. This translates to a 25% return on my investment. So if you could have a choice, would you rather 7% in the shown in yellow or 25% shown in green? Let's move on. How about collecting rent? If you bought property for capital gain in any market around the world, you would instantly right away turn around, and if you don't live in it yourself, you would rent it out. Nobody would ever buy property to leave it vacant. Well, if you're spending money on stocks, it's a buy and hold strategy. The only additional income typically you may get is dividends that the company pays based on performance, which you have no control over. And some companies don't even pay dividends at all. Well, why not take that stock and collect rent on it as well? And this is a strategy called a cover call. It's one where you cannot lose money. The worst case scenario is you make less money, which is not bad at all. So we will have subsequent videos specifically to show you how to collect rent on your stock investment assets. Here's another scenario. What if you bought a stock and it does not rise? Well, typically the buy and hold means you've just watched losses pile up, and either you cut your loss and sell, or you keep riding it out, because you've lost control once the stock is purchased. You have no control over how much dividends are paid to you, if any are paid at all. So I call this buy and hold, is buy and hope. In the case of an options, I can use something called a put option, where I buy a contract for the right to sell at a lower price to control how much value of insurance I want, how much premium I like to pay, so that if the shares go way, way down, I'm still protected. So it gives you power back in your hands. By the way, these logos all have one thing in common. They all went bankrupt, and the original shareholders lost all of their money. Would not have been the case had you used a put contract. So let's look at a scenario where we're selling insurance using option contracts. And we will use a commodity product that is widely known and understood called the iPhone X. That's selling for $999 US for a brand new unlocked entry-level model. And imagine if somebody offered you the right to sell you their brand new unlocked iPhone X as a price protection strategy for $899 within a 1-year period. So you've basically, if you accept, you are selling insurance program to somebody for $15 of premium, which you pocket right away. So in this scenario, only two things can happen. First, you keep the $15 up front, and the buyer never exercised the right. It's no different than an insurance company that sold you car insurance, you never had an accident, and never made a claim. You win, they keep the premium. In your case here, you keep the $15. Or the worst case scenario is the buyer exercised the right and forced you to pay them $899 for a fair value of $999 product. For whatever reason, they needed cash back. Well, you keep the $15 up front still, but now you actually can use $899 to buy a $999 value product. That's a win-win for you as well. So this is something called a naked put, and we will talk about this in another video. Imagine if you wanted to do option contract and make it into a scalable business. And just imagine if you are successful in any other industry. And I said, I'd like to see you grow your sales 10 times, grow your profit 10 times. That is very, very difficult to do. Luckily, in options contract, once you master your strategies and build some confidence, growing 10 times is just adding another zero to the end. The amount of research is the same and the strategies are the same. So it's a very, very highly scalable business model. And again, imagine if you run a successful business, but you wanted to take 2 months off to travel. Unless you have a good team behind you. Otherwise, for a lot of small business, it's very difficult to do. In our case, you can actually park your money in cash, shut off the computer, throw your cell phones away, and everything will still be there when you come back. The options market will always be there. The movement, the price volatility will always be there. And don't forget, cash is also a position. Or you could take your computer with you, and anywhere in the world with internet access, you can continue to monitor your portfolio. You do not need to be a day trader married to your desk and computer, staring at the screen 8 hours a day. And here's another one. Imagine running a business with no rent, no staff, very low transaction costs, unlike selling real estate. You can easily convert to cash. Click of a button, next morning, it's back in your account. You cannot do that with real estate. And here's another one. Compared with real estate, you don't really have diversification. You have hundreds of thousands of dollars or millions of dollars in one physical piece of property. A lot of people like to touch and feel the property. They know their investments, but it is in one neighborhood that you chose, is in one country, and is one currency. That's a lot of eggs in one basket. With options trading, we can buy multiple contracts with multiple companies who do business in multiple continents around the world. And they're hedged in just about every currency there is on the planet. You simply do not have this with real estate. And finally, socially friendly. What does this mean? Let's imagine you own a little shop. You're very happy making money. You tell your success to your friend, and your friend then opens another shop right next door to you. I guarantee you, you will not be friends anymore. Options market is much larger than all of us. This is why I am proud to be passionate about options trading. I can tell millions of people around the world how to do this, and this will not affect my business whatsoever. So there are the 10 reasons why somebody should be trading options. So how do we trade options? Well, first of all, we need to clear up all the confusions about options trading. And there's a lot of misconceptions out there, a lack of knowledge. So the biggest challenge of options trading is education. That's why we created our portal. And we're doing this philanthropy project where we're offering all these videos for free. Then you're going to need to learn, repeat, rewind, and we offer this in the 2 most popular languages on the planet. We will show you how to use these strategies in a virtual account, so you're not ever losing real money. And we want you to make mistakes. Once you learn how to make mistakes and figure out how to correct those mistakes, don't make the same mistake twice. Eventually you will notice you will build consistency and confidence. There's no need to rush. Do not make money in a week and think you can do this and go play with real money. Take your time, can prove to yourself this is working for you before you use real money. And once you've reached that, then talk to your broker, add the options trading rights to your particular account from wherever country you are in the world, and be on your way to success. So next step is, please join us at dlbs.ca, subscribe to our portal, keep in touch with our updates and option trade ideas, tell your friends about us, and more importantly, learn, practice, and repeat. So thank you for watching, and we will see you in the next video. Welcome back. I hope you enjoyed that video and found it useful. Please remember to rewind, practice, repeat, and if you found it useful, please share it with your friends and family. See you in the next video.